Special coverage from the New Orleans Investment Conference is brought to you by Victoria Gold Corp, leading Yukon's new gold rush. Welcome back to SOAR Financially. Welcome back to New Orleans and the New Orleans Investment Conference. My name is Kai Hoffmann. I'm the @JR Mining guy on Twitter and the CEO of the SOAR Financial Group. And we have a fantastic conversation lined up. One I've been looking forward to for a while, because you haven't been on the channel in forever. So I'm really looking forward to this. Lyn, it's the first time we're meeting as well. Thanks so much for coming on.
Great to meet you in person and happy to be here.
Absolutely. As I said, I'm actually a bit nervous because I have a lot of respect for you, and you're probably the most acclaimed market commentator in this space right now on Twitter and X now. You get so much credit. It makes me a bit nervous. I'm humbled.
I'm not sure why, but I do.
Well, I think it has to do with your book and your research. The quality of research is tremendous. It's fantastic. But I don't want to make you blush. Let's dive into the topic. You're here to present at the conference, and Broken Money, Broken World, a bit along the lines of your book. Let's start with some of the main takeaways from your presentation, something you want to leave the investors here with.
I think both. The presentation will start from the problem and some of the solutions. So the problem is, I think, twofold. One is that the system we have now has all these accumulated imbalances in it. Basically, we've hit a local technology maximum. So we can send money long distances, but only using credit. And that has allowed central banks across the whole world to kind of capture these basically people into currency bubbles. And in the United States, we're fairly buffered from this. We don't really see some of the worst effects of it normally. But for example, in Egypt, which a little over a month ago, I just came back from. I go there every year. My family and friends are there. They're dealing with 20% annual money supply growth, and they're in this currency bubble. It's like a treadmill that they have to run in. And there's billions of people in the world that, to varying degrees, have that types of problem. And us in the developed world actually have the same problem, just at a much smaller scale. It's instead of an acute allergic reaction, it's more of a subtle autoimmune disease. It's something that we only experience at very low levels. And that's kind of the world we find ourselves in. And then the problem is it can get worse, because as more and more debt piles up on the sovereign level, you can get more structural inflation. You can get more financial repression, where they're trying to kind of block the exits and deal with the fact that cash bonds are running into issues. But then the second part of the talk is going to focus on how there are technologies now that allow people to bypass financial borders. If you're in Egypt, or if you're in Argentina, or if you're in Nigeria, you have other money options available to you. You can hold Bitcoin, you can hold stable coins, you can basically assets from other jurisdictions that for the first time have enough liquidity and technological capability to go around the normal financial firewalls that people get trapped in.
Interesting. Let's set our conversation exactly along those lines. Let's start with part one. It's how did we get into this situation, right? How did we get into trouble like that? And why is the system sick as it is right now?
So I think a lot of it is a technology mismatch. It's the speed mismatch between transactions and settlements. And so so before the telegraph was invented, technology was mostly about, we got better at mining, we got better at production, we could make all the shells we want and therefore devalue shell money. We could make all of the tobacco we want and devalue tobacco money. Eventually we settled on gold and silver, because those are the commodities that are very hard to increase the supply of quickly. And so most technology had that kind of feature. The second layer of technology we were working on is banking, or various types of bills of exchange, ways to send transactions more quickly, either by having complicated ledger techniques or even analog encryption. How do you make a note that promises something that can't be forged, or is hard to forge, for example? And we don't think of things like paper as technology, but back then they were. The ability to go from papyrus to paper is a technology. The ability to bind paper into books instead of scrolls is a technology. The printing press is a technology, and those analog encryption techniques are a technology. And they were enabled banking. They enabled more efficient use of precious metals. But of course, you started to get abstraction and counterparty risk. But it was still modern. But when we invented the telegraph in the 1830s, and then specifically when it was deployed throughout the 1860s later at a very wide level, we could now send money instantly, globally, but physical gold, of course, is very slow. And so that the mismatch between transaction speeds, which are now based on credit and abstraction, versus settlement speeds were huge. And so the world just became way more abstracted, way more financialized. And we've been in this 150-year gap where that's been the case. What's interesting is that some of these modern technologies allow for a distributed ledger where you can send, you can update the ledger in ways that are not reliant on credit. So you can do actually fast settlement speeds. And that's a new thing, and it's being tested by the market, it's being explored. But until we got to that point, which is still too small to really matter in the grand scheme of things, but basically that's the problem, is that we've been in this technology mismatch. And central banks, commercial banks, and politicians are able to arbitrage that abstraction. They can dilute everyone. They can keep people kind of locked in financial borders. Like again, if you're in Nigeria, you're in this monetary environment. The money supply is going up by, I don't know, the number 15% a year. And it's hard for you to navigate around that. And so until fairly recently, there wasn't that many options, and that's the problem.
Interesting. Like that sort of explains why it takes 3 days to send money from Germany to Canada.
Yeah.
Like I've been scratching my head about that because it's like it should be instantaneous.
Yeah.
In 2023 at least.
Well, and the way that works, it's funny because you think it should be instantaneous, and in some domestic ledgers, it is instantaneous.
Yeah.
The problem is when you interface different systems together, now you're speaking, it's like two languages that have to bridge each other. And so we have a series of correspondent banks, it goes through central banks, it goes through all these things. So that rules out global micropayments, it rules out fast payments, it makes payments expensive, it makes, especially small payments. If you're sending $10,000 internationally, it's a fairly low cost. But if you're sending $200 internationally, you're probably paying very high fees. I think the World Bank estimated that the average remittance fee was 6%. So the people who can least afford it are paying the highest amount. And it's an area that's not had a lot of disruption yet that I think is in the years ahead going to be heavily disrupted.
Like, what's the adoption rate there? It's really interesting because we have the technology exists, but what is the adoption rate? Like a Visa, MasterCard, a Western Union, like how are they looking at it? Like how are they adopting new technologies?
Well, so a lot of them they get to charge 3% on merchants, for example. They have very powerful network effects, and they're basically a bank overlay, right? So they're not really separate payment channels. They're helping banks communicate more effectively.
Maybe poor choice of examples from my end, but I was just trying to understand like.
Well, I think actually it's a good example because most of what we think of as fintech, so whether it's older fintech like credit cards or newer fintech, most of this is an overlay on top of the banking system. All they're doing is finding ways to make banks talk to each other more efficiently. And that helps. It does reduce the cost. And we've seen remittance costs, for example, are going down, but it's going down from a very high level, and it's going down slowly, and it's not really. It should be virtually free to send small amounts of money in the year 2023. But there's even more egregious cases of that. For example, I know a physician in Egypt, a close friend. He stacks American cash dollars that he buys in the gray market under his mattress. That's part of his savings in the year 2023 because the local currency loses value too quickly. And this is not a unique. This is throughout the world. This kind of thing happens. And so both in terms of unit of account as well as international transfers, it's an area that has not been disrupted in a way that software has disrupted a lot of other things. But these are very powerful network effects. Many times they're state-backed network effects, and so they take a lot longer and more disruption to start really making inroads with.
Interesting topic. Like my mind wanders off now why Canada still uses checks for payments.
Yeah.
It's in 2023. Did talk about the time lag between settlement and transaction. There's a massive lag, sometimes months. So interesting how that like sort of plays in. But you mentioned gold as well, and it was an very old technology, gold, because you couldn't forge it, you couldn't print it. Like, how does gold fit into the modern monetary system then? Like into the system you're describing?
So I think it's primarily a reserve asset. The problem with gold is it's just not fast enough. And so in order to send it long distances, we have to basically abstract it. We have to put claims on top of it. And that gives a recipe for corruption, severing those claims, governments controlling the custodian and then therefore deciding who gets those claims. I think so a lot of people hold gold when they're concerned about the the stability of the financial system, right? I think in the future it might be the case where you hold gold because you're not sure about the stability of the internet, for example.
That makes sense. Yeah.
Something like Bitcoin, stable coins, all of our commerce really relies on a reliable internet. But if you're in a world where your internet gets severed from the rest of the world, or you're without internet for periods of time, there's still, I think, a desire for physical holdings of things. It might not be the thing you turn to on a regular basis, but it's like your reserve. I think that's where gold. And also, some of these technologies can accelerate gold. I mean, for example, there are gold-based stable coins that can allow. I could send someone a gold payment over a QR code on a video call, or if they send me an email and say, "Here's my address," and I can send that to them. It goes around there. It could be a graphic designer in Nigeria. I could pay her in Bitcoin, dollar stable coins, gold stable coins, whatever she prefers as her unit. We can find a way to have me pay her. And so it's just a world of money's able to compete more naturally.
Our conversation triggers a whole different line of thinking in my head, and I just went down mentally. It's like internet security, meaning having secure access to internet, which is usually provided by a state-run enterprise, like it used to be. Even Germany's privatized now, but everywhere else it's mostly state-run, or very few places have private telcos. How do you secure access to internet? So Bitcoin, for example, you need a secure internet connection to actually have access to your ledger. Like, is there a way or technology, like I'm thinking just outside the box down here, to set up your own network more or less, so you're not reliable? Because once the power goes off, or once the state says, nope, no more internet today. We've seen that during numerous coups in Egypt, I think, as well, where they're just like, okay, no more social media. We're shutting that off. Yeah. Like, is there a way to circumvent that? Like, that is personally my biggest risk hurdle with Bitcoin and the narrative, because a lot of say, well, it's an alternative asset now, but it's easily taken away.
Yeah. So a couple things. One is there's domestic internet, and then there's like the global internet, right? So you can be cut off from the broader picture. So there are things like undersea cables that are attack points. Now we also have in a world with Starlink as well, right? So sometimes you can access internet even if your domestic terrestrial provider has shut off. So it depends on what level of resource activity you have. So there's a couple different options there.
Decentralizing is the word I was looking for, by the way. Decentralized internet.
Decentralized internet, yeah. Even there's a company called Blockstream, and they actually have satellites that are running Bitcoin nodes, and you can sync your Bitcoin node with their satellite. And so it's specifically to get around some of the internets could be kind of severed from each other or shut off. So there's that. Number two is the fact that your private key can be held, it can be written down, it can be carved in steel. So just because you lose access to the internet for a period of time doesn't mean you permanently lose access to your coins. It just means your ability to interact with the network has been severed. And so most countries are not going to be North Korea and shut themselves off forever from the internet. So you can regain access there. And then there's later technologies now like eCash, where you can send money from phone to phone without the internet. Okay. And it relies on a partial degree of trust, where basically you generally would only want to do it with someone you know, because you're prone to having double spend attacks for that period of time. Like I could give you an eCash token, and then I could give another merchant the same eCash token, and only when the internet's back does this actually get settled back onto the network. And if you're the first person to have received it, so you'd only want to operate that environment if you're, if you know your merchant, if the merchant knows you as a customer, you can engage in that type of interaction even without the internet. And so some of these technologies are getting more robust, and they can survive those types of things. But that's also why, people do like the physical banknotes or physical gold and silver coins. I mean, that's why, people do like having fallback resources should they be without power or be without the internet.
Interesting. Really interesting line of conversation. Really different from all the conversations I've had at this conference so far. But let's get back to, you have a US dollar here on the book, right? You talk about broken money, and my mind went to now urgency, in regard ASO, that was German, installing the new technologies, or setting up the new technologies versus like a broken money system. Is there a sense of urgency to that now? Do you see okay, we need to do this maybe more quickly, or set that up, or adapt more quickly than maybe a year ago? Is there a sense of urgency?
I would actually say no, but I think it's a more complex answer than that. I think that this technology, like something like Bitcoin, cannot adopt quickly. And so with most technologies, like let's say a smartphone or the radio or electrification, you rarely ever de-adopt the technology. You never get electricity in your house and decide, you know what, I don't want this. Only something terrible goes happen, you can't afford it anymore, would you ever de-adopt the technology. So with most technologies, you see a smooth adoption curve. With a monetary technology, with Bitcoin, if it starts to have a smooth adoption curve, that means the price is going up very quickly. And of course, what are people going to do? They're going to lever it. They're going to try to copy it. They're going to buy dog-themed money. They're going to do all sorts of stuff. The speculative bubble that's going to break, and then people are going to be like, you know what, this was a scam. I made a bad choice. They're going to some percentage are going to de-adopt the technology. It's got to spend a couple of years building back from people that actually are researching this, understanding this thing. No, there's actually something here now, and then it builds up another bubble. More people come in, and then it blows up again. Some percentage of them de-adopt it. Instead of like a decade-long adoption curve, this is a multi-decade adoption curve, which I think is healthy. You can't disrupt $100 trillion monetary network in a decade. It's like multiple cycle thing if it's going to be successful at all. So there's that. When I talk about the book, it's more like, okay, so we're in this period where some of these technologies are still fairly young. They're still being tested. They're still, able to be attacked in various ways. So my goal with the book is to, one, educate people on it. I'd rather have normal people understand how this technology works before BlackRock.
Okay.
That's my goal.
Yeah.
I'd rather have people throughout the
Might
world.
be running out of time on that one.
I think we are. So there's that. And then number two, it's so for politicians that might go after it or thought leaders that might attack it, to try to make them change their mind a little bit, because the more years that the network has to kind of grow and solidify, the stronger it gets to any sort of attacks that might come. So I think it's important to help kind of protect it while it's still it's a 15-year-old, it's a teenager.
That's a nice way to put it. Yeah, it's a.
Yeah.
Let's talk about the U.S. dollar for a moment. Sort of at the end of our conversation here, like how healthy is the U.S. dollar in general right now? Like if you were to compare it maybe with other currencies, or is it the healthiest currency out there still?
It's strong, but I think there's a disconnect from healthy. So ironically, the stronger the dollar is, the more it generally results in a trade deficit for the United States. And so I think in general, something like the Norwegian currency, the Swiss currency, the Singapore currency, those are probably the pinnacle of strength, because they actually, if anything, they intentionally devalue their currency. Otherwise, we get too strong. So that's the position they want to be in. They have big current account surpluses. The dollar's in a position where it's very strong in a network sense. So there's all this dollar-denominated debt around the world, and all of that represents inflexible demand for the dollar. In addition, the dollar is the most globally saleable money, so it's the most liquid money. And money tends to be network effects. If you're not the best, it doesn't matter. You're either number one or there's no second best, basically. And so in terms of global saleability, it's the dollar, and then there's a long tail of everything else. And specifically, and this is why it's hard for BRICS to fully compete with it, is if you're a country that runs a surplus and you get all these money units, whether it's dollars, whether it's another currency, you want to be able to reinvest that into something. And so the fact that the United States has a very large capital market is very important for the dollar, whereas Germany has a much smaller market, France, so the euro has a bunch of smaller markets that are fractured. China has a closed capital market. Brazil, like all these other countries, they don't have the depth and liquidity and diversification of the United States capital market. And so that's a big headwind for them. I think where the dollar runs into issues is when you look at, for example, Ray Dalio's work, Changing World Order, and he maps out empires over the course of their lifetime. There are some metrics that are leading indicators and some that are coincident and some that are lagging. So things like education generally get better early, while the other things are still weak, and that starts dragging up the other things. And there's other things like economic strength, military strength that are kind of coincident. They are kind of the definition of the empire. There are other things like reserve currency status that are lagging. So they don't really take off until you're already been big for a while. And then even when you get past your prime and start to fall in education or stagnate in economic and military strength, your reserve currency status still has a number of decades to roll over because it has all that built up momentum, the network effects. And that's, I think, where the stage of the United States in, which is that when you look at his work, when you look at other work, we're not leading in education anymore. We're kind of on the downtrend. our economy's good, but as a share of the global economy, it is shrinking somewhat. Our military is also shrinking as a percentage of the global pie, even though it's the single biggest still. But our dollar network effect is still near its pinnacle because it's a lagging indicator compared to these other ones. I think it still has plenty of time ahead of it. It's just the world's changing slowly.
Interesting. Who would you say would follow up now, like in that role? Like, okay, world reserve currency, US dollar is declining. If you had to put a bet on any currency right now, like who would follow the US dollar, or what would follow the US dollar?
So I would say no individual fiat currency, because if anything, this was an anomaly. This is based on what I mentioned before, this period between fast transaction speeds and slow settlement speeds. So there's been two fiat, like basically the British pound to some extent, and the American dollar. So when the dollar became the world reserve currency, the U.S. was like 40% of global GDP, and we had all the gold, we had all the industrial base, and over time, the gold's become more globally spread out. The industrial base is certainly spread out. If anything, China is now by far the heart of the global industrial base, and now we're running structural trade deficits. We still have the best tech. We have the network effect of the English language. We have a great geography. So we still have a number of strengths, but it's more dispersed now. And the United States is 15 to 25% of global GDP, depending on how you measure it. We're not the biggest commodity importer. That's China. So we've diversified more, but neither Europe nor China are anywhere near what the U.S. was in the 1940s. None of them are 40% of the global GDP. They're aging demographics, weaker geography, not as attractive capital markets. And so there's really no country, including us, that is able to kind of be the global ledger for everyone anymore. So I think what we're heading towards is a more multipolar world, where countries hold gold as part of their reserves at an increasing percentage. Large players like China are able to buy things in their own currency. They can go to Iran or they can go to Brazil and say, we're going to pay with this in yuan. We're just going to bypass the dollar. That allows them to then hold fewer dollars as their reserves, because they don't need to hold dollars to buy oil. They can just buy with their own currency. So I think you see a handful of major currencies able to do that, and then we'll see what happens with Bitcoin. I mean, it's still, the market capitalization is under $1 trillion, but let's give it 15 years and a couple more of these liquidity cycles, and see what happens with this kind of global settlement ledger. And that's kind of the Game of Thrones we're witnessing here. You have the dollar, you have some of these rising ones that none of them are really going to be big enough for the whole thing. Gold is a good reserve asset, but it's not fast. You have to abstract it to keep up. And Bitcoin potentially could be the king of the whole thing, but it's 15-year-old, so we're not there yet. So check back in 10 years, see how we're doing, and that's, I think, the landscape. I think the takeaway from that is it's multipolar.
Fantastic. Lyn, wonderful conversation. I could go on forever asking questions about the whole global monetary system. It's fascinating. Where can we find more of you? Where can we find your book?
People can check out Broken Money on Amazon, and also they can look up lynalden.com to see my investment research.
Fantastic. And you're super active on Twitter as well, or X or whatever. It's like I refuse to call it X. It sounds weird.
Me too.
So, fantastic. Lyn, thank you so much. It was a fantastic conversation. I really appreciate it. Everybody else, thank you so much for tuning in. I hope you enjoyed this conversation as much as I did. I have to Google a lot afterwards and follow up, and definitely read your book, because I only got it today, so I'll definitely have to chase down some chapters here. So fantastic. Make sure to follow Lyn, of course, but also follow us here. Hit the subscribe button as well, because I know 80 to 85% of you watching are not subscribed. Let's change that. Thanks so much for that, and we'll be back with lots more here from New Orleans.